Let me know if you have any questions. We go on live every Monday, and we do Q&A on anything automotive related that's business related as well. So technicians looking to open a shop, maybe you currently have a side shop and you're doing side jobs and you're not sure how to grow that. We can definitely talk about that. Let's see. Anything shop related? If you're a technician looking to open up a business, uh, if you have any questions about that, we can go into that. Uh, how to structure it, how to work with lenders, how to build your business credit. We can talk about all that. Let me see something real quick. And so usually I start off. I open up with a bunch with questions. If you have questions, you can put your questions in the chat, and we can kind of go into that question. And so tonight I wanted to go into what it takes to get a loan from a bank. And a lot of people reach out to me like, "Hey, I'm a technician. I'm looking to I'm looking to open my own shop. How do I get a business loan? How do I go about applying for a business loan from a bank?" And one of the things it's a big challenge whenever you're providing a service business is that the banks see it as almost as a high risk uh, investment. And the reason why they see it as a high risk investment is because there's not really no assets there. There's not really no assets there. And if the bank were to lend you 150,000, maybe 200, uh, there's nothing they can do to get their money back if your business fails. And what the reason why uh, they do this is because on average, most businesses fail within the first 3 years. If not the fifth year, they'll fail. And so a service business, especially if the owner is going to be doing a lot of the work, then it becomes a higher risk because the whole business is reliant on that one person. And so now the business becomes a higher risk because everything is banking on that one person to make the business function, right? So what I show technicians is I show them a strategy that allows them to acquire assets while they're still a technician, while they're still trying to figure out what they want to do. And so there's several ways that you can do this. And most technicians, what they'll do is they'll start by doing side jobs, and then they realize, man, you know what? I have a lot of side jobs. I'm just gonna quit, and I'm just gonna go full time and do my side jobs, right? Well, what will happen is that whenever you make that transition, you cut off you know, that stable income from when you have a job, that reliable income, that guaranteed income that you have from your job, right? You actually cut that off, and then you're going independently, and so now everything is riding on your shoulders to make ends meet, to get jobs, to market, to make sure everything gets done right, right? And so one of the things that you can do if you're looking to open a business, if you're a technician, is to make sure that you stay at that company where you're working at for at least 3 years. Okay. Make sure that you have, of course, you have proof of income, but during those 3 years, you want to make sure that you're building up your credit. And the way you do this is if you don't have any credit or if you have bad credit, of course you're gonna have to, toughen up and pay off some of that bad debt so you can start to rebuild your credit. But as you're rebuilding your credit, you want to start to build your credit. And so let's say if you have a five something credit score, right? And you have outstanding debt, right? Well, you're gonna have to call and see if you can negotiate a settlement amount to pay off some of that debt. But as you're doing that, you can start to build up credit. And one way to do this is to get a secured credit card. And so that way, as you're paying down your debt, you're actually building up your credit. So you're not going to pay down your debt first and then build up your credit, right? And so the reason why this is going to be important is because whenever you go to open up a business account, now you can apply for business credit, and you'll have that as an extra backing whenever you do decide to break out. Okay. But as far as like buying a building, because see, most technicians, they want to buy a building, right? And if you're a technician and you're a sole proprietor, if it's not structured correctly, the bank's not even going to give you the time and day to just consider your loan. If it's a sole proprietor and you're looking to buy a building and open up your business, that's a very, very high risk. And the reason being is because if you're a sole proprietor, that means that everything's in your name. That means that you're responsible for everything. So that means if you have an automotive business and someone decides to sue your automotive business, the building's included. So the building's going to go in with that lawsuit. So the proper way to do this is to form an LLC. So let's just say it's AutoBody LLC, right? Well, then it's going to be AutoBody. Maybe it's Commercial LLC. Commercial LLC is going to own the building, and you're going to lease the building from yourself. You understand? So now you're leasing the building from yourself. So it's like having two businesses. And if you have this structured correctly, it's going to look more exciting, more investable to a bank, because they understand, the proper structure, right? And that's one way to do it. And you're probably thinking, okay, well, what if I can't get approved for a loan, right? What if I can't get approved for a building? Well, we have other ways to get around that, right? And for example, if you find a building, we can talk to the seller and say, hey, would you consider doing some kind of terms on this building? And when I say the word terms, what that means is that we're going to pay them in payments for the building. Okay. If they agree to the terms, then what happens is now you actually own the building. You still owe them. You still have debt on the building, but technically the deed is in your name. Okay. So now if you were to go to the bank, now you're just doing a refinance. You're not trying to do a new purchase. So the refinance is always going to be easier than you trying to purchase the building straight up, because they're going to want more information about your income and all this stuff. But when you go to refinance, they're going to go based off the asset. And when I say based off the asset, they're going to go based off the value of the building. And it's going to be a lot easier to refinance it. So there's a bunch of different ways we can go about it. We can even decide, hey, you know what? Let's see how long the seller will term the building out to us. How long will they let us pay us in payments? Maybe they might want to do 15 years. Maybe they might want to do 20 years. So there's different ways to get into the building. You don't necessarily have to go through the bank. You don't necessarily have to go to the bank to get that loan. Okay. Typically, service businesses, it's going to be very hard to get lending. The best thing you could probably do is make sure that you have specialize in a service. And whenever you decide to specialize in a service, now you become like an expert in that service, but it also makes your work easier because people know you for providing that service, right? And what a good example of this would be like, what is it? Minuteman, right? Minuteman is with an oil change, right? So let's just say Minuteman specializes in oil changes, right? because they specialize in oil changes, they provide that one service, but they do it in a way that uh, is scalable because they have a step and a process of the way they do it. And so now it's easier for them to train their other guys that come in. Let's just say if you have an automotive company, right? You can decide to do heavy hits. You can decide to do fleet accounts. You can decide to do minor repairs. You can decide to do just PDR repairs. You can decide to do, you know, there's a number of things you can decide to do. Whatever you decide to specialize, you can decide to do color restoration where you're not, doing any collision repairs. You're just kind of restoring the finish. There's a bunch of different avenues you can go through. Uh, that's going to be one of the main things. But back to the building thing, like, you know, let's just say you have to go through a bank to buy a building, right? Well, the bank will use your income from your job to qualify you to buy the building. You see? And so you're gonna buy it as an investment. You want to buy it as an investment property, and you're gonna it's called owner occupied. So you're gonna owner occupy the building, right? And the reason why I'm saying this is because look, if you think about it, like if a bank lends an automotive shop 150,000, right? And that shop goes and buys they go buy a lift, they go buy a frame machine or whatever, right? The equipment, right? If that business fails, the bank does not want anything to do with that equipment. The bank is not in the business of repoing equipment. They're not in the business of selling equipment. They're not in the business of taking buildings back and trying to resell them. They're in the loan business. They're in the interest payment business. You understand? They're in the long-term game of finance business, right? So you have to look at it from their perspective. They're not trying to take these high risk. Another thing you can do is oh man, it wasn't recording. Oh, it's still recording. Okay. Another thing you can do is another thing you can do if you're looking to get a building, you can try to run it through your name. You know, if your credit's right, you can try to run that building through your name and just lease the building from yourself. That's basically what it is. You're buying the building as an investment property, and then you're leasing it yourself. So you're owner occupying the building. Okay. There's a lot of most automotive shops, they really don't need there's a lot of companies that will give line of credits to automotive shops on parts, material. So it's not really that big of a deal to get started. In fact, uh, any service business, like it's going to be pretty easy because you know you're not selling a product, so you're not having to buy anything. It's more service based. So it all depends on how you're marketing that company. Let me know if you have any questions relating to that. I know it's like a specific topic about buying the building, but we had some questions on YouTube about it, so that's why I wanted to make the video in case uh, they watch the replay on YouTube. They can actually see what I was talking about this, about purchasing the building and how to go about doing that. The thing with commercial buildings is that uh, sometimes they're tricky to evaluate if there's not any comps in the area. And what I mean by comps is like if there's not any recent purchases. But also the good thing about commercial building is that if you find like an older building, if you find an older owner, you can make a deal with them. You can make a deal with them and get a good deal on a building. The guy that we bought our building from, I had talked to him like about 5 years prior to buying the building. But I asked him, I said, hey, first I was renting the building from him. And then I said, hey, at some point, are you gonna want to sell the building? And he says, yeah, probably like in the next couple of years, maybe the next 5 years, I'll probably go ahead and try to sell the building. And he says, I said, would you give me an opportunity to buy it from you? And he says, you know what? I'll give you, you'll have first opportunity to buy the building from me if I decide to sell it. And so basically what I started doing was starting to get my banking relationships going. And the way you get the banking relationships going is you got to go in there and you got to, introduce yourself, tell them what you're about, and start to do some kind of business with them. Whether it be you moving your business account over there, maybe it's you getting a small collateral loan, maybe it's you getting a small equipment loan, like maybe like $1,000 loan, and then maybe go from 1,000 to 2,000 to 5,000. And what you're doing is you're just building a relationship with them because in the next 5 years you're going to ask them to do you're going to see if they want to do a bigger deal with you. And so you want to start to build that relationship. Most people wait till the last minute and they're trying to build this banking relationship, but commercial banking, commercial lending is different from conventional. And so most commercial lenders, they like to build relationships with their clients because they make money off that. They make money off those notes. Let me know if you have any questions related to the automotive industry, AutoBody or mechanic. Like I said, I run a automotive auto collision repair shop here in Texas, and we bought that building. We rent from ourselves. We got the structure correctly. It's correct. We have other investments, and so we actually used that automotive industry as a vehicle to buy other investments. Once you get those relationships going with your lenders, and I mean, and then you know how to find deals, you can do a lot of things. You can do a lot of things. Let me know if you have any questions relating to that. Anybody trying to buy a building or anybody trying to start automotive business. We made a lot of mistakes. Starting at first, my business was a sole proprietor, and it was a custom shop. So it was South Texas Custom. That was the business, and so it got very hard to market because I was trying to target insurance claims, but whenever they read the business name, it said custom, so they thought we only did custom work. So also when I was trying to build a website, it was hard to build the website because it was South Texas Custom, so people assumed that we just did custom work. So it was very hard to get insurance claim work, and plus, everybody knew me for doing the custom work. So whenever they would go, it was me that would always be looking for to do the work, and so it was very hard to market that because um, it was a sole proprietor business. I was paying a lot of taxes, and people only want me to work on their car. And so the way that we had to fix that is we had to shut down that business. We closed that business and we created a new business, a new LLC. And the new LLC was Certified Collision Works LLC. And so I actually became an employee for that. So I employed myself. So I actually worked for the company that I owned. And we rented from the company that I owned. You understand? And we were able to build a brand out of that because we had a logo. So now the company had a logo that we can use to market, and it wasn't a sole proprietor. So now it was almost like an individual person of itself. It was a person of itself that can uh that didn't it wasn't I wasn't attached to it. I was able to detach myself from it, but I still owned all the LLCs. So I still owned the three LLCs that operated. I employed myself through that. And so whenever you go to lenders, or whenever you go to try to get money for other investments, the structure looks better. The structure looks safer. So they know that it's a little bit safer structure than a sole proprietor. Let me know if you have any questions. I'm going to be on for another couple minutes till 9 o'clock, and the floor is open. You can ask whatever about anything related to automotive industry, whether it's auto collision or auto mechanic. I know last week we talked about doing estimates. The estimates going to be very important. But the building thing, I mean, even if you have to do a lease to start off with, do a lease. Do a lease to start off with. And don't be scared about a lease. You can always negotiate a lease. All the and a lot of times, if you're transparent with the landlord of that building, they'll work with you on certain things. So don't try to be sneaky about it. Be very transparent about what you're doing, about what, like, you can even say, hey, you know what, I want to rent this building. It's my first time owning a business. I know it's going to be pretty rough to start. But will you please just work with me? If I'm late on the rent, or if it takes me some time, or maybe you can ask them, says, hey, you know what? Can you maybe give me a better rate for the first year? And if everything works out, we can do a new lease and you can raise the rent up. You can also ask them to give you a 30-day like advantage, like a 30-day advance. And what that means, like, you can say, hey, if can I move in this month but start paying you on the first of next month? That gives you one whole month to start to build some business and get some money in. So there's a bunch of things you can do to negotiate the lease. So don't be intimidated by the lease. Don't be intimidated by the lease. What pisses landlords off is whenever you're not transparent with what you're doing. If you're not paying the rental time and you're not telling them, or you're just kind of avoiding them, it's gonna piss them off. But if you call them and says, hey, you know what? I'm gonna be late on the rent this month. I should have it on the 5th. Uh, but I mean, as soon as I get it, I'm gonna take care of you, and just keep them updated, and they won't be upset with you. They won't be pissed off because you're trying to communicate with them, and you're letting them know what's going on. Um, and just to say, if you have to break the lease, don't just leave the building abandoned. Like, go talk to them. Says, hey, you know what? I know my lease is 1 year. I've been here for 7 months. I think I'm gonna have to move out. Is there a way we can just terminate the agreement if I, make sure that the place is clean? You can start to market it right now. There's a bunch of different things you can do to get out of that lease without making it like a big deal. There's a bunch of things you can do, and also, if you go to purchase a building, you can use that lease or that landlord as a reference to do like a seller finance deal or something. We got Frank Automotive. What's up, Frank? How you doing, man? Tonight we're talking about so Frank, we had a guy on our YouTube that asked, he's a technician, and he's trying to he wants to buy a building and open up a shop. And so he was asking what's the best way, or how do you get a business plan to open up an automotive shop? And what I was telling him is that, most banks stay away from automotive like service businesses because they're high risk. And especially if the business is not structured correctly. And so one thing that I talked to him about was that, if you're looking to purchase a building, you might want to look at some kind of seller financing first. And whenever you can get into a seller finance agreement, the building is technically yours. Like, you're technically the owner of the building because the deed's in your name. So now if you go to a bank, it's going to be a lot easier to refinance versus doing a repurchase. Okay. So there's ways to go around it to get a building if you need a building, or to find a building. there's ways around it if you can't get lending through a bank. And so most commercial buildings are not going to be a typical lender like a house lender. Those are going to be more commercial lenders. And the commercial lenders, they really rely on relationship. They're relationship based. So you got to build those relationships. And so if you're not working with the commercial lender, start shopping around for a commercial lender that you can build a relationship with. And the best way to do this is, like I said earlier, is to start doing business with them. Maybe move your business account over there. Maybe get like a small collateral loan. Maybe get like a $1,000 collateral loan. What that means is like you're saying, hey, I want $1,000 collateral loan or 2,000. You're gonna give them the money and they're gonna give you the loan. And so basically, what it is like you're guaranteeing the loan with your money. But the thing is like you're using that transaction to build a relationship with that bank, you know. And so you can even say, hey, you know what? I want to do a collateral loan for $1,000, right? You give them the 1,000, they're gonna give you 800 back because they're not gonna give you the whole 1,000 back. They're gonna give you 800 back in a loan, and so you're gonna have monthly payments. Well, what you can do is you can just put that money into the bank and just make those payments. Like I said, the purpose of this is not to get the money and go spend it. The purpose of this is to build that relationship. So after you pay that off in 6 months, go back and say, hey, I want to get another loan. Maybe do it for 2,000. After the third or fourth loan, they'll start to lend you money with no collateral. And because your payments were on time and you built that relationship. And if they see your business growing, they're gonna want to do more business with you. Okay. And so, like I said earlier, the business is not the business is the vehicle. Okay. And when I say the business is the vehicle, the business, you're going to use the business to acquire other assets. Okay. The business is a vehicle. So just think of it like this. Just think of it as just think about, okay. So let's just say your destination, like you want to go somewhere, right? And you can either walk there and it's going to take you a long ass time, or you can drive there, right? Okay. Well, the business is a vehicle. It's like a car. Okay. You can decide, how fast do you want this car to go to reach your destination? You can be lazy and not invest into your business. It's going to take you a long time. Or you can suck everything out of your business and not acquire any assets. And when I say acquire assets, I'm talking about, assets can be like, okay, technology. How can I make my business better? How can I make my business one of a kind? How can I invest into my business that no one else is doing? Did you know that Jiffy Lube invented the 300, I mean, was it the 30,000 mile oil change? Because see, like you don't have to get your oil change that soon. You can get your oil change at 7,500 miles. But Jiffy Lube said, hey, you know what? If we create a sticker that says they need to get their oil change every 30,000 miles, they're going to come back more frequently and we're going to have more repeat business. So what they did was they invested in just creative strategies and ideas to come up with that and made their business different. You see? They actually invented that, you know? So assets are going to be things that make your empire more valuable. So you use your business to acquire assets. Assets can be in the form of a bunch of different things, right? They can be in the form of you developing a unique website that attracts clients left and right. It can be into you developing some new technology that only your business has. It can go into developing a certain process, a certain service. You specialize in a certain service, but because you invest into that, now it's an asset that's generating more money for you. You can also invest in other commercial properties, real estate, things that are going to generate you more income. I mean, I know as a service business, we think of assets as like tools, right? But the thing with that is like the tools don't make us money 24/7. You understand? So what about if you use your business, use your automotive company to buy a storage building that has 10 storages on it? Okay. So you use your business right? You drive your business up with a lot of attention, a lot of traffic, right? And then you take that income and you go and buy this 100 unit storage building. Okay. So now what happens is the storage building is paying you every month. So you just build an asset. You understand? So that's how you got to use the business. You got to use the business like that to acquire these assets, develop systems, make it run a lot faster, smoother. Even investing in people is a good investment. Well, guys, I'm gonna head out. Uh, leave your if you have any questions related to this, leave them in the chat. Whether you're on YouTube or TikTok or wherever you may see this, leave your questions in the chat and we'll get back to that. And we'll definitely be on next week. Like I said, we have a private meetup at 7. If you're interested in that, go to stanmedina.com and just sign up for the Zoom thing. Any of the videos, you'll find the link tree. If you go to the link tree, you can sign up for the free Zoom. The Zoom is going to be Mondays, and it's live Q&A. You can also ask any questions about the automotive industry, what you're trying to do, and if there's any resources that you need, I can maybe provide those resources for you. I know that we provide like a lot of authorization forms. We help with estimating. We help with estimates. We help with marketing strategies, how to get fleet accounts. There's a lot of different things that we can help with to help your business run a lot smoother. Okay. So hey guys, till next time, I'll see y'all next week. Reach out. Also, I'm on the Stan Medina on Instagram. Like I said, all my information is on the link tree. If you go to the link tree, you'll find me there. And man, I'll be happy to reach out to you. A lot of people that message me on Instagram, I'll get on the phone with them the same day and just see what they're trying to do, man. So reach out to me if I can help with anything related to your business. And let's keep rocking, man. Later, brother.